Greetings and welcome to this case study. Today we're going to do a case study USDCHF. Now, as you can see on the chart, we are currently on pullback in the market. And that pullback, the trend in that pullback is showing a bullish movement. So let's do the analysis together. So we mitigated we are on a downtrend here. We mitigated a demand zone. After mitigated that demand zone, had a change of character, had a daily other block here. And before that, we had a 4-hour supply zone. So for this analysis, we are going to do analysis on the buy and also on the sell. So for this sell, we had a change of character before the move. And our take profit is daily demand zone. So for this buy, we had a flip entry. And we targeted this high supply zone here. That's where liquidity is in the market. Now let's go to the daily to see. Let's go to the 4 hours to see what the supply looks like. Now this is what the supply looks like on the 4 hour. This first one mitigated this inside our supply. Then for this hour entry, I mitigated this 4 hour supply before moving. Then it moved to this daily demand zone. Let's go to the daily time frame to see what this demand zone looks like. So this is what the daily time frame looks like. An inside bar demand zone. That's how to enter for this. Let's go back to the lower time frame to focus more on the short entry first. So this is the 1 hour time frame. Let's focus on this chart. So for this short entry, this is what happened. Let's zoom in. After market mitigated this 4 hour supply zone, we had a change of character here. Market first of all swept this high, and after sweeping it with some weight, had an impulsive move to the downside. So it led to this break here. After that break, market came down to this point to mitigate this demand zone here. So after its mitigation, it came up and mitigated the supply zone that led to this positive down movement. So this is what the area looks like. So after that, market continuously kept moving down, and it moved down to this inside bar daily demand zone here. So this entry was just a very clean entry, just like this. So it's just a very, very clean entry in the market. So this is the entry, the concept here. Very clean entry. So whenever I have such a thing in the market, the coinfluence is very high. You can possibly trade it. But no, this is not financial advice. So for the second trade, we'll turn on the chart date. Now let's focus more on this buy entry. Now for this buy entry, we've noticed something. Markets swept this low and mitigated this daily demand zone very high speed. It was just a single candle. So after it mitigated, we had a rejection. So that gave us a clear insight that the market is about to reverse. So let's go to a lower time frame to see what actually happened. So this is the 1 minute time frame. That's why we had our flip entry. Let's zoom in. So this is what happened. At the break here, the mitigation here of the daily demand zone. After that mitigation, market left the demand zone here, and it moved up to this supply zone that led to is mitigation. After the mitigation of this supply zone, market came down, mitigated this inside bar demand before moving. So before moving to the upside. So what we have for this chart is one is to 37. Now this is what actually happened. Talk about the concept. We had down move, a swing, a lower low, lower high, mitigation of this of demand. So this is it. Had a break of structure. Had a break of structure. Had addition of daily demand zone. Market went up again. Indicated that daily demand zone mitigation. Then we add another demand mitigation here on the lower time frame. So we took our entry from, and we had change of character here. So this is exactly what happened here, and this is what we call a flip entry. So this is what we call a flip entry. So we might once in a while you might see this in the market. But what led to a confirmation for the trade is this inside bar mountain. Anytime you see an inside bar point of interest, just know that there is high chances of it holding. So for this trade, we had one is our risk to reward is 1 to 37. So let's go to the 15 minutes. This is where we took profit. We took profit at the high of this supply zone. So we know that's where most of the liquidity will be. For our next entry, we are looking at this demand zone here for the move. So that's it for this case study. See you on the next one.